Okay, good morning, folks, and welcome to our first morning update and member stock chart request for 2018. I hope everybody who didn't check out my commentary over the weekend has an opportunity to do so. Welcome new members, and we have a lot of them. So let's get to the events of the morning. Over the weekend, I spoke very, very bullishly with regard to gold, precious metals, the financials, etc. So this morning, we are waking up and we have a fresh weekly and monthly high sequentially on the price of gold, which is what you're looking at right now. This is a 4-hour chart. Now, when you take a look at the monthly chart, here's what we're looking for. I'm going to take our crayon out, and here is what we got. So far, here's your prior resistance level on a monthly basis. Here's our breakout this morning, or overnight, I should say, on the price of gold. Now, it's only the first trading day of January 2018. That does not mean that we will close above it. What matters is not where we trade intra-month, intra-day, intra-week. What matters is where we close. So far this year, this month, we are looking good. Let's check out the US dollar. All right, the dollar, we have a fresh monthly low on, but we have not taken out the year's low of last year at 91.01 on the Dixie. We have the futures market, which is up marginally this morning for the U.S. averages. And now what I want to do is segue into our gold members stock chart request. And we are going to kick things off with Bitcoin. I have done a couple of these videos with regard to the technical analysis of Bitcoin. They are posted on the blog and on YouTube. But this is the first request that I've had from a member to analyze the chart for them. So here we go. Bitcoin on a daily basis, daily chart is looking good. The last time I spoke about Bitcoin, I mentioned that we were looking to hold the support level here in orange, and if we broke it and overshot, we'd come back down to this lower blue line. We did that. We broke down, retested the lower blue line, and then we rallied back. Now, this green line here is our upper band of resistance. So the question then becomes, the obvious question, Bob, do I add a position? Can I open up a position here? It depends upon you and your ability to adhere to a stop loss. If you're going to make a commitment to yourself that if we break down below either this low here seen on 1229 or especially the lows of 1222, if you're going to stop out, sure, you could scratch the itch, buy a couple of bits of a Bitcoin. I still don't have the terminology down, but the technical analysis is the same for stocks, Bitcoin, doesn't matter, price of tulips. And I would look for the smart trader to add on a breakout and a close above this upper band of resistance. Then you could add more to your position. If you're not good at setting stops, I would wait for the breakout because the probability of a continuation move higher is good. You do have resistance above right here at 16,200 and of course up here at 17,242, and the Pimp Mac Daddy resistance level is at 1974.80, which marks the all-time high. And when you get up to this level, the question then becomes, do we break out or do we break down? You'll hear me say this over and over again. The test is always at the top. Watch for that breakout. If we break out above this upper band of resistance, you could look to add. Now, I'm not including any of my opinions about the fundamentals, the soundness of Bitcoin. This is purely a technical play. The indicators are showing no divergences to the upside. So that is my thought on Bitcoin. Let's get to the other charts, which are primarily stocks and ETFs. All right, so a number of these I went over in great detail yesterday, but I didn't go over the daily charts, so I'll spend some time going over those daily charts. If you want some analysis on the weekly, monthly charts, go to the members area and take a look at 2018 stock market strategy, and you'll see many of these names that I've already gone over. And if I didn't go over them yesterday, well, then I will go over the weekly charts today. So let's kick things off with the XLE. I did review it. This is the energy ETF. I reviewed it yesterday. I was quite bullish on it. We are a bit extended here. We're consolidating. We have our Stokes rolling over. Many times you'll see an initial rollover like you had here and then a hook back up. Same deal here. I'm expecting the same. So we may get some weakness here. That doesn't mean I don't like it anymore. I'm looking for a continuation breakout formation to develop. Now that could be in the form of a bull flag formation or simply a sideways consolidation. When would I add? I would add if we drop down intraday, then rally back to recapture this support level here, flashing a bullish key reversal. I would scratch the itch. I would open up a small position and then add on a breakout above resistance. Volume has been anemic both to the upside and downside of late. Watch your MACD histogram. They are dropping off a bit, losing momentum, but you're in a trading range, right? So you can't read too much into that. So I'm bullish on the XLE. It's just a matter of when do we pull the trigger. EYES. I am bullish on EYES. I'm cautious right now. We did pull back. We booked profits on this one up here. We pulled back, reversed, and closed back above the support level. Last week, we reversed on the week, but we closed up. But what this candlestick is telling you right here is that we have resistance above. We have sellers from back here wanting their money back. That's overhead supply. So we need to see a breakout above $2.03 and a close above that level before we look to add more. I think that we'll get it. Daily chart. Now on a daily chart, we are getting a lower high. So when I say that I think that we'll get that breakout above $2.03, it may not be today. We may get some backing and filling here. So we have a possible double top on EYES. If we get a breakdown below and a close below $1.60, that will be a confirmation breakdown on a daily basis. Stokes are not looking good. They're weakening some. We're rolling over on RSI. So the daily chart is looking weak while I'm fairly constructive on the weekly chart. We'll keep an eye on this. How is volume? Volume is very light to the downside on Friday. I think today is going to be a really serious tell for EYES because you're going to have your volume traders back on the street, and they'll give us direction on where EYES is heading next. PLG, Platinum Metals Group, we have been consolidating for several weeks now. This is a weekly chart. What I would be looking for is, your eyes aren't deceiving you, I added some lines here, is a continuation breakout on weekly RSI. You can see that we have broken out on RSI. So we have an indicator leading price performance. We have Stokes, which are hooking up and breaking out. And we are consolidating very nicely at the 28-cent level. So I think that this is a position that could be put on a speculative bet because you've got the metals that have been rallying of late, yet Platinum Metals Group has not been rallying. So that's a tell. It's underperforming. It's lagging when it should be rallying. So there's something going on here that's concerning, and it's not on a technical basis. Whatever the issue is with PLG is being reflected on the charts. There's no buying interest. Now, last week's volume, this is going to go contrary to what I just said. Last week's volume was good for an abbreviated week, but the prior week was also high for a down week, and that was an abbreviated week. So you need to, long story short, you need to get a breakout above this upper band of resistance. We need to get out of this downtrend. So if you wanted to scratch the itch, buy some shares with a stop right below, sure, go ahead, pull the trigger. Then add more aggressively on a breakout above the upper band of resistance. All right, the next chart up is Western Digital. And the story of this chart can be told on a weekly chart and a weekly chart only. Because I can make two cases, one bullish, one bearish. We'll start with the bull case. And that is that from a higher level view, and you wouldn't see this on a daily chart, but on a higher level view, we have an inverted head and shoulders setup forming. left shoulder, head, right shoulder. And our 45-degree neckline coincides with right here, 92.73. But that's a good ways away from where we're trading right now. So the bear case is this, is that in 2017, we put in a double top. And in fact, we broke down below that level in November, but we didn't close down below it. We rallied back. So the question then becomes, do we finally break support here and see lower lows, thus negating this inverted head and shoulders setup? Or do we double bottom out or put in a higher low on a weekly basis and then break out, thus challenging the inverted head and shoulders neckline? And if we break out above it, that's a very bullish event. So short term, I'm bearish. It's a wait and see approach to putting on a long trade here. If you're not long of this stock, why bother? Because it's showing relative weakness versus the rest of the market. However, if we break out above this resistance level here, well then, it's worth a second look, because the macro view is that we may challenge the upper band of the neckline, and if we break out above it, that's a very bullish setup. Keep in mind, you have a lot of overhead supply. Buyers back here in 2014, 2015, and buyers in 2017, they are going to want their money back. They're not looking for a profit. It's all overhead supply, psychological resistance, not easy to get through. So I see no rush to get involved here to the long side, but it's certainly one that I would watch. We have a possible higher low forming in a double bottom setup on stochastics. We'll know whether or not we have a true double bottom setup and a higher low by Friday, end of business. Possible double bottom setup here on RSI. This is going to be an interesting one to watch. We have some signals that are signaling a possible bottom. No follow through yet on price, so it's a watch. The banks, daily chart. I went over the weekly and monthly charts of the banks on our strategy session yesterday. It's posted in the members area. So today we'll talk about the daily chart. Now, while I was bullish on the banks on a weekly and monthly basis, I'm a bit concerned on a daily basis, short term. Why? It's because we have RSI and Stokes, our leading indicators, making lower highs and lower lows. Price action, we are in a consolidation, no breakdown yet, and certainly not a short. So what are we looking for? We're looking for one or both of the following. A retest of the lower band of support, ideally an overshoot to the downside with a bullish key reversal and a close above support. We can scratch the itch, we could put on a small position, and then look for a breakout above this upper band of resistance. That will be a new all-time high for the banks, and the probability of us having a strong 2018, at least the first half, is very, very good, especially with, and this cannot be ignored, you must see interest rates rise. That helps the bank's NIM. It's an acronym, net interest margins. I'm not loving the Stoke RSI, so I think we have some backing and filling here to do on the banks. I would not go buying them this morning. We will talk about them in greater detail throughout the next several weeks as we put on our positions for 2018. Healthcare. We spoke about this one on a weekly and monthly basis over the weekend. We are breaking down on a daily chart. We have lower highs on RSI. In fact, as we were putting in higher highs on price, we had RSI, which was diverging, putting in lower highs. Not good. We have Stokes, which will open up down below the 50 level this morning. That is a concern. Why? It's because when you have both lines on Stokes trading down below 50, rallies fade. So don't go chasing the healthcare sector if it begins to rally this morning or until we get a hook up on these Stokes. Now on price, we broke down below this lower band of support and we put in a lower high. So you're seeing weakness on the healthcare sector. Could it have been profit taking last week? Sure. For all I know, we break out to new all-time highs today, right? All we're going to do using these charts is discuss what the charts are telling us as of the last trading period. And right now, On a daily basis, very short term, we're seeing some relative weakness. If we get a new daily low, you could even put on a very short term short on the healthcare sector. But that's speculative, and I'm not going to participate in that. Okay, so our last chart up is going to be a chart of JDST. This puts you short. It's a leveraged ETF, very volatile. It's going to put you short of the gold mining names. And for those of you who have watched my commentary of late, especially members, you'll know that I am quite bullish and have been for over 2 years now on gold, and we've made some very serious profits in the gold mining names. Now, I expect a strong 2018, but you know what? We could always be wrong. We want to be humble, and that's what keeps us liquid. So what are we looking at here on this weekly chart? What stands out? Well, we bottomed out in September on JDST, and we broke out above a resistance level and had a strong fall. And into the first week of December, there it was stopped dead. And we've pulled back on JDST. Now, while I'm bullish on gold, and we have made a new sequential monthly high, we want to remain open-minded. We have tax issues here that take effect in 2018, which may be dollar bullish. So while we're seeing weakness in the US dollar, the repatriation of S&P 500 foreign profits may prop up the dollar. Now, I'll defer to more educated Austrian economists, never a Keynesian economist, but Austrian economists, on how this might impact currencies. And I'm probably reading all too much in it, but I'll be honest with you, I have a small hedge on my gold mining position because I am concerned about it. But I think that in the next several trading days, the market's going to let us know whether or not the repatriation is going to have any impact longer term on the US dollar. So what are we looking for? If I am accurate and I have reason to be concerned about a stronger US dollar, we'll want to see this support level hold here at, let's call it, what's the low last seen during the week of October the 17th? It was 48.94. Where do we close? 51.31. I think we'll get a retest of that level. If we don't retest it and we rally back, we'll be looking for a breakout above this upper band of resistance. If we break out above 78.06 and close there, guess what? The dollar will be rallying. And we will need to do a rethink of our long gold and gold mining trade. But as it stands right now, I am in the bull camp on gold and the gold miners. But of course, we're going to keep an open mind, and I will have one eye always on the US dollar. And that's it, folks. Everybody have a profitable trading day and an excellent 2018. I'll talk to you soon.